Today has shaped up to be a wild day for the stock market. The stock market heading into CPI, which comes out tomorrow at 8:30 in the morning, doesn't know if it wants to rip or if it wants to drop. We have seen a lot of these weird, very bearish drops throughout the day, and you've also seen some pretty parabolic rallies. Now, in regards to AMC and the whole, we'll just call it meme stock sector. I hate saying that, so bear with me. I hate it just as much as you hate hearing it. There's no other way to put it. BBBY, GME, AMC, all these stocks that have been rallying over the last couple of days are starting to give up a little bit today. And why is that? Because when you're heading into CPI, a big catalyst like that, you're going to see hedge funds shorting these stocks, especially these stocks that have rallied a lot over the past couple of days and couple of weeks, because they are, what is it? Easy targets. Yes, they are easy targets for the shorts. Now, do I think the rally in AMC stock is over? Absolutely not. We're going to talk about this on a technical basis and why today still looks so good for the technicals, even though AMC stock is down about 6%. So let's get straight into it with the economic data and what is going to be happening for tomorrow. Now, 8:30 in the morning, core inflation year over year, and 8:30 in the morning, inflation rate year over year. This is CPI. We are expecting a CPI reading of about 8.7%, and we are expecting a core inflation reading of 6.1%. So we are expecting core inflation to actually go up from 5.9% to 6.1%, and we're expecting the CPI to go down from 9.1% last reading to 8.7% this next reading. Now, that's going to be very important. Tomorrow you do have PPI month over month for July, and then on Friday you have the Michigan Consumer Sentiment Survey coming out at 10 a.m. But really this week CPI is going to be the big dog, and that is what is going to move the markets in a big way throughout the rest of this week. It would not surprise me if core inflation is high like we expect it to. We get a new all-time high, or a new recent all-time high, and then you get a new recent all-time high of CPI, and the markets sell off 3%, 3, 4, 5%. That's very, very possible because this whole rally that we have seen over the last couple of weeks, a pretty parabolic rally in the grand scope of things, as history would show us, in the last 20 years, you've only seen about 10 rallies this strong over such a short amount of time. Well, this is just a big bet that inflation was going to go down for that July reading and for the August reading as well. People are expecting that September CPI to also be heading down. Now, what you were seeing as far as the Fed Futures Monitor tool, this is the federal funds rate. People bet on what the Fed is going to do and how aggressive they're going to raise rates, and you have seen a complete 180 over the last 10 days or so. About 10 days ago, there was a 0% chance of a 75 basis point rate hike. Well, now you're sitting at a 61% chance of a 75 basis point rate hike. And essentially, what has really changed over the last 10 days? Well, on Friday, you've seen the payrolls that more than doubled, like, from expectations. We expected 258,000 new jobs. We got over 500,000 new jobs for the month of July. So that goes to show the economy can support increased rate hikes. Now, if CPI and, core CPI continue to go higher, well, that's going to say, yeah, the Fed has a lot more work to do, even though we're at that quote unquote neutral rate that a lot of people do talk about at about 2.5%. So that's why tomorrow is going to be key. It will move the probability of a 75 basis point rate hike, but what it also will do is it will start to throw this question in the air. Is the Fed just going to give us an emergency rate hike for the month of August? Because we don't have a Fed meeting in August. The rates don't go up in August. They go up September 21st, 2022. Now, we already got a strong labor report. If we get inflation that's not coming down, and on top of that, you've seen financial conditions loosen. You've seen the 20-year bonds actually going down. You have seen just the stock market going up. people feel a little bit richer now than they did over the last couple of months. You're in a much better place financially as far as financial conditions and economically to handle a rate hike in August. So that's going to be the question that starts to fly on Wall Street is, are we going to get a emergency rate hike for the month of August? And obviously if that happens, that would be a very, very negative thing for the stock market. Now, on top of that, you are seeing the yield curve, which is inverted 48 basis points. This is a steeper inversion than the year 2000. You really have to go way back in history to get a yield curve that was inverted this much. So this is a telltale sign that we are heading into a recession. We are in a technical recession, but the labor market has not felt that yet. You know, certain sectors of the economy are not doing so bad right now, but wait until those flip. You will get a whole new consensus in the markets, and people will say, yeah guys, we're in a recession. I mean, we've had 2 consecutive quarters of declining GDP growth. You're in a technical recession. Wall Street can change, or Washington can change the definition all they want, but you're still in a technical recession. Now, as far as earnings here today and after hours, you have Coinbase, Roblox, The Trade Desk, Plug, Unity, Wish, Celsius, Invite, Wynn Resorts, and Magnite. I think these are going to be important. Coinbase, Roblox, Trade Desk, these guys are probably going to move the markets the most, especially Coinbase with the whole fintech situation, and the Trade Desk. That one will also be very important. Now, for pre-market tomorrow, you have Jack in the Box, Wix, Jumia, Wendy's, Arcos, Dorados, Paysafe, Fox, CyberArk, Bullard, and Xeris. And why I'm saying this is because you're going to have CPI as well. So you're going to get Coinbase, Roblox, these important companies today and after hours. And then by the time you guys wake up tomorrow, you're going to start to get earnings from all these other companies, and you're also going to have CPI. So there's going to be a lot the markets are dealing with coming tomorrow, and I think it is going to be very, very eventful. Now, Wednesday and after hours, you have Walt Disney, Dutch Bros, Coupang, Matterport, Sonos, Bumble, and a couple other small companies that don't really have a big impact. So really from now until, call it tomorrow and after hours, that's going to be the most important, the most volatile time period of this week, and you're probably going to get that bullish or bearish direction confirmed to us. Now, AMC stock, look at these options that are coming through. A lot of these are incredibly bullish, like a September 16th $50 call, a block trade worth $22,000, a September 16th $30 call worth $127,000, $25 call for August 19th, $22 calls for August 12th, $22 calls for August 19th. These orders, $250,000, 170,000. You know, hedge funds are just throwing a lot of money at AMC here today, even though the stock is down 6%. Another $205,000 trade, a $22 call expiring by August 12th. More $22 calls. That looks to be a pretty popular one. $300,000 order right there. $200,000 order right there as well. And we're not going to go through all of these, but virtually all of these orders are calls. They are bullish. Now, what we're actually seeing for the day, 240 orders totaling $27.36 million. Positive order value of 85%. So incredibly bullish what we're seeing as far as the option activity. Now, as far as the short interest, you're looking at 2.31 billion in total dollars that are currently sold short. Estimated short interest of free flow 18.72%, free flow out on loan 25.6%, shares out on loan 132 million, days to cover 2.87, and 100% share utilization. Now you are seeing a cost bar max at 9.87%, cost bar average at 8.77%, and a cost bar minimum at 7.26%. So looking pretty good there. Can't argue with the data that we are looking at. Now let's talk about the technical picture for AMC stock as of right now. Why I'm actually bullish on AMC. is because we came up, we had a very strong day yesterday, right? We did peak out at $27.50 per share. We ended up closing just under $24 per share, went up in after hours, went down. We ended up really closing after hours around $25 per share. So closer to the higher end range, but not quite, $27.50 like the peak that we did see. But right here, I mean, we're still firmly above the 200-day moving average. We're currently trading at $22.36 per share. The 200-day moving average, the next level of support, is at $20.83 per share. Now, AMC has had a very strong rally. We could be seeing a 10 or 20% red day today, but we're not because of the 8-share dividend, because of the strong fundamentals that AMC posted, and I doubt that we're going to really flush under the 200-day moving average. Again, CPI would have to be bad tomorrow and just have a bad overall market reaction, in my opinion, to get a big move to the downside. This looks like a consolidation day after we have rallied a lot over the past couple of trading days or so. Like, let's put this into a little bit of perspective, okay? So from August 1st, just the start of August, that was 8 days, not even 8 trading days. We had a 5.56% gain. August 2nd, you had a 9.69% gain. August 3rd, you had an 8.01% gain. August 4th, you had a 2.47% gain. August 5th, you had an 18.86% gain. Yesterday, you had an 8.03% gain. And now we're down 6% and people want to cry? No. It's just the simple fact. It's the simple truth that this one day is not going to be indicative of anything, especially after we've had such a strong rally. It doesn't look like this is going to be the peak of what we are going to see this time around. Now, the RSI, this is healthy. The RSI is heading back down to more regular levels after it hit a high of 78.92 yesterday, which was substantially overbought. Now you're at 72.98, which is still overbought, but by the end of the day, I'm sure you'll head back down to that mid-60s range, and that will be very bullish for the next leg of the rally. Now, also, you are seeing the MACD, which is firmly in positive territory, which is also good. And today, you are seeing a lower volume day than what we have been used to over the last 3 trading days or so. Currently, volume sitting at about 33 million shares. So tomorrow is going to be a big day for data, guys. CPI is going to really dictate the show, and depending on what happens with that, we might be talking about a rate hike in the month of August, when we should not be. That would be, yes, an emergency rate hike decision if that does happen. So that is basically going to be all for this video. Hit that like button and subscribe to the channel if you guys have not already. Also, make sure to get your free stock down below in the description with Webull, Moomoo, and Public. And if you guys want to come trade with me live in real time, link down below in the description as well. You guys enjoy the rest of your day, and I will see you in the next one.